This is the monthly chart of gold. Gold is at a long-term high, and that might be good news for people who are buying gold, but the bad news for the rest of the world is that the USA currency is getting debased. In this video, we are going to see how the rise in gold price is showing how the currency is being debased. Then we are going to see how can you profit from this gold boom, because I think this is a big money maker for a lot of people. We're going to see how can you buy the ETFs, how can you buy stocks that have a lot of gold so that you can try to protect your money as much as possible. The first website I think you should look at is this gold broker website. This chart shows you how the dollar value has been crashing. In 1971, Nixon took the dollar off the gold standard and then promised that the dollar in your pocket will be worth the same, but we can see that the same amount of dollars over time cannot buy the same amount of gold. With 14,000 in 1971, you could buy 400 ounces of gold. In 2024, you can only buy 6 ounces. And currently, you can buy about 3 or 4 ounces of gold. Does this mean gold has become more valuable, or the US dollar has become less valuable? This chart is something for us to watch constantly. Now back to the technicals. This is the monthly chart of gold, and we have the composite index, an oscillator. It helps us know when the relative strength indicator has failed to show divergence. Here we can see the relative indicator shows a higher high, but the composite shows a lower high, and you can see it topped there. The relative strength indicator failed to catch that divergence in price, but you see it here in the composite. What we are seeing on the monthly bars is this very tight price action. So that means that nobody was selling gold. The value of gold refused to go anywhere for about 4 months. Then in August, we can see that the buying pressure forced the gold to go up, and now it is breaking out of this triangle. So gold is coming from this big 4-year consolidation, and it is doing this huge run, which I think is going to end in around 2026. So if we go to the weekly chart, you start from a bigger time frame, and then you keep going down. The first thing you can see is the relative strength indicator is constantly above 60. This shows how bullish the signal is. Whenever it stays above 60, the security is in a very strong trend. And we see that gold has formed a base of about 19 weeks. This is a nice base because such long bases create strong moves. This base looks like a triangle. And the triangle in Elliott waves, for those who don't know, normally happens in the 4th waves. So that means that there is one final move of gold coming, and in commodities, the 5th wave in Elliott wave principle normally ends with an exploding run. So there are several things. We have the Elliott wave principle showing us that, hey, this is likely to be explosive. We see a nice triangle here, and then it's forming this kind of a flat resistance here. Flat resistances are very good. Some traders are out there who only trade these flat resistances because they're more trustworthy. And that means that we can trust this breakout of gold. Of course, we don't want it to come down here. Then if it comes down, then it's mostly a fake. But we can see that there are several things showing us that this is not going to be a fake move. So how can you profit from this? We've really studied the gold. We can see that it's in a very huge move. The 4th wave means that the move is about to finish. But it's likely to finish in a spectacular fashion because it is a final move out of a triangle. How can you profit from gold itself? Now, gold itself moves very slowly. We can see gold moves about 1% every day. So what I do is focus on 3 times ETF. The first one is called Shiny. So here in this 3 times ETF, I already told people in the newsletter to buy, so sign up for the Profit Punch newsletter. It's a stock recommendation newsletter that will tell you exactly when to buy and sell, and also has educational materials so that you can go from a beginner investor to a confident investor. There are several plays that we have in our educational resources hub, so sign up for the newsletter and you'll get access to everything. So here we see a clear buy, and then we're just waiting for it to close under the 50-day exponential moving average. The reason why we like a 2 times ETF is that here you can see that from February 2024, this ETF has gone up 200%, which is very nice. But then if you look at gold itself, gold has only gone up about 67% in the same time. So you'd have gotten a 200% return instead of 67% return. Then in terms of gold stocks, I like AU. It's a very good gold stock. So you can see by recommendations, people profited. On the weekly chart, it also formed a very nice breakout over there. It has this big cup and handle, and then it looks overextended. Stay away from it. There's HMY, which kind of crashed last week, but I think it might be a fake out move. And then if it recovers and then reaches about $14, then it will be a buy, because maybe the big traders are trying to check out people, and then the price will recover immediately. There's Ola Mining. I recommended it. There's AGI. I also recommended this to the people in the news later. These are the gold stocks you can watch. Whenever they pull back to the 50-day moving average, you can add to the position. If you want to know exactly where to buy and sell, sign up for the Profit Punch stock recommendation newsletter. You'll know exactly where to buy and sell. And also the ETF, Shiny, is not too late to get in. So if you're watching this video, I would say you can still buy. The best time to buy was around here, $70. And we in the Profit Punch community, we bought. And now we're just going to wait and see. But I don't think it is overextended. If I was buying right now, I'd just buy here at $76, put my stop around 7%, and then wait and see what happens, because I think this is going to be a very huge move. I hope you found value in this video. May the markets be with you.